Joining us now is Mr. Keki Mistry, Vice Chairman and CEO of HDFC. Good morning, Mr. Mistry. Thank you very much for joining us. It's the turn of the new year. What is the sense you are getting? Is demand for loans already picking up?
See, Lata, fortunately for us, as far as our individual lending is concerned, even in the last 3 years when the economy was slowing down so much, we did not see any decline in lending, and the opportunities to lend were huge. So last year, for example, in the year ended March, we grew 26% in individual loans. Year before last, we had grown 31%. Year before that, 27%. So the growth numbers had never changed. But in the non-individual segment, 70% of our lending is to individuals, 30% is to non-individuals. The non-individual segment did see a slowdown in the last 3 years. We had in the first, I'm not going to get into third quarter numbers, but if you look at the first 6 months of the year, we had seen a little bit of a pickup. Is that indicative of a massive change? Very difficult to say, but yes, we did see a bit of a pickup, because if you look at incremental lending as against a situation where a year ago non-individual lending was less than 10% of incremental lending, in the first 6 months it was 19%. Though on a book basis it is about 29%.
Okay. Mr. Mistry, hi, good morning, and thank you for joining us.
Morning.
When are you expecting the first rate cut from the RBI, and what would that really do to the demand for home loans?
My sense is, and this is what I said earlier on also, that notwithstanding the fact that inflation is now still extremely low, I personally believe that RBI will wait for the budget, see what kind of fiscal deficit is left, see what kind of budget is presented, and then look at rate cuts in March. That's my personal view. Though I would, of course, be happier if the rate cuts happen earlier, but I think RBI will wait. Having tackled inflation so very well over the last couple of years, they're not going to let it slip by just, sort of preempting it and doing the rate cuts 1 or 2 months earlier. What will it do to demand? What will it do to demand? My sense is the growth that we have been seeing has largely been coming from tier 2, tier 3, tier 4 towns and cities. The big cities, if you look at the hearts of big cities, the expensive properties, those have not grown, or those have seen a slowdown in the last 2 or 3 years for obvious reasons. One is property prices are high, interest rates are high, and so on and so forth. So my sense is when interest rates start coming down, there will be possibly a little bit of a pick up in the demand for housing loans in the metros, in the hearts of big metros.
Okay. What about the cost of money, Mr. Mistry? It must have already fallen for you. How do you see it in the next quarter?
My sense is cost of money will come down, or should come down, as RBI lowers rates. I don't know whether it will happen in next month.
No. Market rates have already fallen. So. Market rates have already fallen, isn't it?
Yeah, market rates have fallen. But I'm saying, as I said, RBI cutting rates is something I would say would happen only in March. So I would say if you look at 2015, and if I was to look at it today, 2015 will clearly see lower borrowing rates and therefore lower lending rates compared to what we saw in 2014. Okay. But if you are a home loan customer, and if, for example, you've taken a floating rate loan, then you will get the benefit of falling rates in 2015 when rates come down.
Okay. I wanted your view on the latest news that the government is using this ordinance route to push the insurance reform. The opinion that we got is that foreign investors may not be very confident putting money, if it's an ordinance versus if it was a bill. What is your own assessment of what the interest would look like?
See, very honestly, this ordinance was passed just late last week, so we've not spoken to our partners as yet. This is, as you know, Christmas and New Year time. So we will talk to them in the new year, and we will get a sense of what they are feeling and how they want to go about it. But my personal view, and this is without speaking to them, is, and this is again based on what I've heard from experts, is that any decision that is taken now, or any investment that comes in now, will be valid even theoretically, and this is purely theoretically, that the bill fails and is not passed in Parliament in the next 6 months. This is my understanding. Also, had the government having pushed through the bill through a legislation, through an ordinance, I'm sure if for whatever reason it is not passed in the upper house, they would probably call a joint session of Parliament and get the bill through. So it would obviously give more comfort to foreign investors if the bill was actually passed, but the ordinance, to my mind, will be good enough to get people thinking and start, some of them can even start putting in money.
So your sense is therefore there is a big expansion in the insurance industry waiting to happen because there's more capital coming in?
A big, yes, expansion in the insurance industry. If you look at the need for capital, there are not too many companies that are raising capital or that are requiring capital at this point of time.
You guys need?
So foreign investment coming in, not as we stand today. My understanding from our insurance people is we don't need capital today unless and until we go in for an acquisition. Obviously, if we go in for an acquisition, then there will be need for capital.
Okay. But there is consolidation in the industry. You all are looking seriously at some of the weaker players.
We have always looked at expansion or looked at consolidation. So we are open to any opportunities that are there in the market.
The Azim Premji Trust bought that 1% stake in HDFC Standard Life last week. Do you see any more such deals happening?
Unlikely in my view. Now that the foreign ownership limits in insurance have been opened, we will now sit with Standard Life, our partners in Edinburgh, and take a call on whether to do an IPO, when to do an IPO, how much Standard Life will increase their stake, when they will increase their stake, and so on and so forth. So till and until we've had a discussion with them, I think it's a little premature to talk about what we will do. But the sense is clearly both Standard Life and HDFC want the company to do an IPO. Timing of that IPO, however, is a different issue altogether.
Okay.
No, I don't think there'll be more stake sales.
Okay. Okay. Mr. Mistry, actually the more interesting conversation lies with HDFC Bank. They've taken an enabling provision for 10,000 crores of capital. That would be about 5% of their equity. Will HDFC choose not to apply if and when, say, it's a rights issue or if and when they have a chance?
I think if we were to have a chance, we would like to apply for sure. However,
but you will block FIIs.
Our shareholding. So that's what I'm saying. So we recognize also the fact that we have, we are considered as foreign, which is very honestly very unfortunate because we are totally Indian. We have only Indian employees. We have only Indian directors. We are only listed in India. We have not issued shares directly to foreigners. All our shares have been issued in the local market in India. But for whatever reason, because foreigners have bought shares in the local market, we are considered foreign. So it's something we need to discuss with the bank. At this point of time, if it's a 5% dilution, 5% brings us down from 23 to 22. 22 is still gives us sufficient doesn't change things significantly for us. But we would definitely not let our stake fall below 20 because 20 gives us the ability to equity account the profits. If we go below 20, my understanding is that under international accounting standards, we would not or we may not be able to equity account the profits. So it's a call we'll have to take. We will discuss with the bank, but we continue to lobby with the government to say that we are not foreign and that we are domestic, which really and truly we are.
Okay. Any progress on the proposed merger between HDFC and HDFC Bank? I mean, the last time when we checked with you, you said that there were some constraints. Have those issues been ironed out and any timeline that we can expect?
I don't think we can give a timeline on something like this. We have always said, all of us have said that a merger makes a lot of sense in the long term. However, having said that, there are certain regulatory costs associated with a merger. Some of those regulatory costs have come down by virtue of the circular which RBI issued in July, where they permitted affordable housing loans as part of infrastructure lending, and therefore they said that if you borrow 7-year money and use that for giving certain categories of loans, 40 lakh and 50 lakh rupees worth of loans, then those loans will not qualify for CRR, SLR and priority sector lending requirement. But whether that by itself is enough to force a merger is something we need to evaluate and sort of keep discussing. But at this point of time, if the bank is looking at doing a capital issue, I would say if we would go ahead with the capital issue, then we would address this issue.
Okay. Well, have you all been speaking with Ergo as well for the general insurance? Will they be more interested in increasing their stake, Mr. Mistry?
Again, as I said, this ordinance came in last week. So if the ordinance came in last week, there's not been enough, as you know, this is Christmas and New Year time, all these people are out. So we will discuss with them in the new year. But yes, our earlier discussions, both with Standard Life and with Ergo, would clearly show that both of them are interested in increasing their stake beyond where they are now.
All right, we'll leave it at that, Mr. Mistry. Thank you very much for joining us.
Thank you.
And we do hope you and HDFC have a great 2015.